Oh, hi. Well, it's tax time again. Income taxes are due on Monday. Real estate taxes are due in a couple of weeks. I know this is not a fun way to end out the week, but we want to talk about some real estate tax trends in the Puget Sound region. May as well try to prove that Jack Nicholson was wrong. You can handle the truth. So when we look at real estate taxes, we can see that they've gone up pretty much every year in the region. In 2012, real estate taxes went up about 8.5% region-wide to $1,165 a unit. Every county has seen major increases in taxes over the last dozen years or so. And taxes are going to be heading even higher this year, we expect. First of all, levy rates are going up. We track levy rates in 42 market areas around the region, and only one of the 42 has lowered levy rates for 2013. The other 41, levy rates are higher. So when you combine higher levy rates with the likelihood of higher assessed values this year because the apartment market has been strong, prices have been climbing, you're looking at some pretty heavy tax increases. Why is this important? Well, for one reason in particular, real estate taxes are probably an apartment investor's single largest expense aside from a mortgage payment. And real estate taxes over the last dozen years have climbed at twice the rate of rents. This chart shows that the average rent in the region climbed just under 40% since 2000, whereas real estate taxes are up about 80%. So that's a significant impact for apartment investors. Well, what can you do about that? Well, maybe not much for a lot of investors. This chart shows what assessed values are on all the apartments that sell each year. And you can see that for the period between 2000 and 2008, assessed values ran just under 75% of sale prices. Then they jumped very rapidly, where the average assessed value was significantly higher than sale prices as our economy crashed. And in the last couple of years, as prices have improved, the assessed values have come down as a percentage of sales price. Assessed values are generally going to lag what's actually happening in the market. In the first quarter of this year, assessed values averaged about 80% of sale prices. That sounds like good news. However, that's just an average. It's still about 20% of the sales that took place so far this year were assessed for more than the property sold for. Half of them were assessed for about 20% more than what they sold for, and a quarter of those overassessed properties were overassessed by almost 30% of what the properties sold for. So for at least some investors, there is an opportunity to reduce their real estate tax burden by adjusting those assessed values through an appeal. Now, in the related article that comes with this video called Out of Whack, it's on our website at www.duprescott.com. We have a summary of this article, we have the charts that you see here in this video, and we also have some tips from 3 real estate tax experts on what to do to control your real estate tax bill. I hope that you enjoyed this week's video and that you'll come back next week for another weekly apartment update.